Question 1. Which of the following is true regarding the coordination of disability insurance benefits with Social Security disability insurance (SSDI)? Private disability insurance benefits will automatically be reduced by the amount received from SSDI. B. SSDI benefits are always supplementary to private disability insurance benefits and never impact the private benefits. C. Disability insurance policies will adjust the private benefit payout based on the specific rules set forth by the insurer regarding SSDI coordination. D. Social Security disability insurance benefits cannot be applied for if the individual is receiving private disability insurance benefits. Answer. C. Disability insurance policies will adjust the private benefit payout based on the specific rules set forth by the insurer regarding SSDI coordination. Explanation. Private disability insurance often has provisions that coordinate with Social Security disability insurance (SSDI) benefits. Typically, this coordination means that the insurer will reduce the amount of the disability insurance benefit to account for any SSDI benefits received by the policyholder, but the specifics can vary by policy. For example, some policies may reduce their benefits dollar for dollar, while others may reduce them partially. Insurers have the discretion to set these terms, so it's important to carefully review the policy to understand how SSDI benefits will impact the private coverage. This coordination ensures that the policyholder doesn't receive more than 100% of their pre-disability income. Question 2. Mr. Thompson recently applied for a long-term disability insurance policy. His application was approved, but he did not disclose a previous back surgery on his medical history form. After being injured at work, he filed a claim, but the insurance company denied it, citing his failure to disclose the prior surgery. What is the most likely reason for the denial of Mr. Thompson's claim? A. The insurance policy does not cover injuries that occur at work. B. Mr. Thompson's failure to disclose the back surgery constitutes a material misrepresentation, which can lead to denial of the claim. C. Disability insurance policies are always required to approve claims for work-related injuries, regardless of prior medical conditions. D. The insurance company must pay benefits for all claims that meet the policy's terms, regardless of any non-disclosure. Answer. B. Mr. Thompson's failure to disclose the back surgery constitutes a material misrepresentation, which can lead to denial of the claim. Explanation. Insurance policies generally require full disclosure of medical history during the application process. If a policyholder fails to disclose a material fact, such as a previous back surgery, the insurer may have grounds to deny the claim, especially if the undisclosed condition contributes to the current disability. In this case, the back surgery is a material fact that, if disclosed, might have influenced the insurer's decision to offer coverage, its terms, or its premium rates. Under Missouri law, failing to disclose material information can result in the denial of benefits under the principle of material misrepresentation in insurance contracts. Question 3. The self-employed individual, Sarah, is considering purchasing a disability insurance policy. She has been advised that she needs a policy with a non-occupation clause. What does this type of clause mean for Sarah's policy? A. The policy will provide benefits only if Sarah is unable to perform any occupation, regardless of her specific skills. B. The policy will provide benefits only if Sarah is unable to perform her specific occupation as a self-employed individual. C. The policy will provide benefits if Sarah can no longer work in a similar occupation, even if she can still work in her own occupation. D. The policy will not provide benefits unless Sarah is completely unable to work in any capacity, regardless of occupation. Answer. B. The policy will provide benefits only if Sarah is unable to perform her specific occupation as a self-employed individual. Explanation. A non-occupation disability insurance policy covers the policyholder if they are unable to perform the duties of their specific occupation, even if they are able to work in another field. This type of policy is particularly valuable for professionals or self-employed individuals, as it ensures that they can receive benefits if they are unable to work in their own occupation, even if they could potentially work in another. This coverage is important because it provides more comprehensive protection compared to any occupation policy, which would only pay benefits if the individual is unable to perform any occupation, not just their specific job. Question 4. Which of the following is most likely to be a reason for denying a disability insurance claim due to a pre-existing condition in Missouri? A. The claimant's disability occurred after the waiting period, but their pre-existing condition was unrelated to the disability. B. The claimant's pre-existing condition was disclosed on the application, but the disability is unrelated to it. C. The claimant's pre-existing condition was not disclosed at all, and the disability is related to that condition. D. The claimant's pre-existing condition was disclosed, and the insurer agreed to cover the condition under the policy's terms. Answer: C. The claimant's pre-existing condition was not disclosed at all, and the disability is related to that condition. Explanation: in Missouri, as in many states, disability insurance policies often include clauses regarding pre-existing conditions. If the claimant fails to disclose a known medical condition on their application, and that condition is later found to be related to the disability, the insurer may deny the claim on the grounds of non-disclosure. This is a form of material misrepresentation. Most policies also have a pre-existing condition exclusion or a waiting period during which the insurer will not cover conditions that existed prior to purchasing the policy. If the disability is related to a non-disclosed pre-existing condition, the insurer is likely to deny the claim. Question 5. Which of the following is the primary purpose of the elimination period in a disability insurance policy? A. It determines the maximum number of days an individual can be disabled before losing benefits. B. It is the waiting period before the insurance company starts making benefit payments. C. It is the period during which the insurance company assesses the validity of the claim. D. It calculates the amount of monthly benefits the claimant will receive. Answer: B. It is the waiting period before the insurance company starts making benefit payments. Explanation: the elimination period is the waiting period before disability insurance benefits are paid out. This period, which can range from a few weeks to several months, is set by the policyholder at the time of application and affects the premiums. The longer the elimination period, the lower the premiums tend to be, but the policyholder must wait longer before receiving benefits. The purpose of the elimination period is to prevent the insurer from paying benefits for short-term illnesses or injuries that resolve quickly. This feature is a standard part of most disability insurance policies and helps reduce administrative costs. Question 6. A Missouri-based disability insurance agent is helping a small business owner select a group disability insurance policy for their employees. Which of the following is most likely a feature of such a group disability policy? A. It will always cover pre-existing conditions as long as they are disclosed at the time of enrollment. B. It provides individual underwriting for each employee, which can vary based on their health and occupation. C. It typically offers the same level of coverage for all employees, regardless of their specific occupations or health conditions. D. It is not subject to state laws regulating insurance and can have different terms than individual policies. Answer: C. It typically offers the same level of coverage for all employees, regardless of their specific occupations or health conditions. Explanation: group disability insurance policies, especially those offered by employers to their employees, typically provide standardized coverage. This means that the coverage terms, including benefit amounts and waiting periods, are the same for all employees in the group, regardless of their health status, occupation, or other personal factors. The main benefit of group policies is that they allow employees to obtain coverage at a lower cost than individual policies. However, because the coverage is the same for all employees, it may not address the unique needs of individual employees, especially those with specific health concerns or occupations that carry higher risks. Question 7. Mr. Lawrence is a 60-year-old individual who recently applied for long-term disability insurance. He has a history of heart disease which he disclosed on the application. After receiving an offer, Mr. Lawrence is concerned about how his pre-existing condition may affect his premiums and coverage. What is the most accurate advice to give him? A. Since heart disease is a pre-existing condition, he will not be able to obtain any long-term disability insurance. B. Pre-existing conditions like heart disease will likely increase his premiums, but he can still obtain coverage with potential exclusions related to his condition. C. Mr. Lawrence can obtain full coverage with no exclusions as long as he discloses his heart disease. D. The insurance company must cover Mr. Lawrence's heart disease under all circumstances if he discloses it. Answer: B. Pre-existing conditions like heart disease will likely increase his premiums, but he can still obtain coverage with potential exclusions related to his condition. Explanation: when an applicant for disability insurance has a pre-existing condition such as heart disease, the insurer may increase premiums or apply exclusions related to the condition. This means that while Mr. Lawrence can still obtain coverage, the policy may not cover claims related to his heart disease for a certain period, or there may be limitations on coverage related to that condition. In many cases, insurers will offer a modified version of coverage that excludes the pre-existing condition for a certain period, or they may charge a higher premium to offset the increased risk. Question 8. Which of the following is a key characteristic of non-cancelable disability insurance policies? A. The insurance company can increase premiums at any time during the policy term. B. The insurance company cannot change the policy terms or premiums as long as the policyholder continues to pay premiums. C. The insurance company has the right to cancel the policy if the policyholder's health deteriorates. D. The policyholder can cancel the policy at any time without penalty. Answer: B. The insurance company cannot change the policy terms or premiums as long as the policyholder continues to pay premiums. Explanation: non-cancelable policies are designed to provide the most stability for the policyholder. Once the policy is issued, the insurance company cannot change the premiums or the terms of the policy, such as coverage, as long as the policyholder continues to pay the required premiums. This type of policy offers peace of mind for policyholders who want long-term security and don't want to worry about rate increases or changes to their coverage over time. However, these policies tend to have higher initial premiums compared to other types of policies that allow adjustments to premiums or terms. Question 9. In Missouri, which of the following is a requirement for disability insurance agents who wish to sell policies within the state? A. Agents must be licensed with the Missouri Department of Insurance, Financial Institutions, and Professional Registration, DIF, and maintain continuing education requirements. B. Agents are required to pass the national licensing exam only without the need for Missouri-specific education or certification. C. Agents must be registered with the U.S. Department of Health and Human Services rather than the state DIFP. D. Agents do not need to maintain continuing education as long as they have passed the initial licensing exam. And so, A. Agents must be licensed with the Missouri Department of Insurance, Financial Institutions, and Professional Registration, DIF, and maintain continuing education requirements. Explanation: in Missouri, as with most states, disability insurance agents must be licensed by the Missouri Department of Insurance, Financial Institutions, and Professional Registration, DIF, to legally sell disability insurance policies. In addition to obtaining a license, agents are required to complete continuing education courses to ensure they stay informed about the latest laws, regulations, and industry practices. This requirement helps maintain high professional standards and ensures that agents are up to date on changes in the insurance market and relevant legal requirements. Question 10. Which of the following best describes the role of a vocational rehabilitation program in disability insurance claims? A. It is a service designed to help the claimant return to their job by providing job training and placement assistance. B. It is an option available only to claimants with severe, permanent disabilities and is not typically used in long-term disability claims. C. It is a service offered by insurers to help claimants receive Social Security disability benefits. D. It is a program where the insurance company selects a new job for the claimant to take, regardless of the claimant's prior occupation. And so A. It is a service designed to help the claimant return to their job by providing job training and placement assistance. Explanation: vocational rehabilitation is a key aspect of disability insurance claims, particularly in long-term disability cases. Insurers may offer vocational rehabilitation services to help claimants return to work, either in their previous occupation or in a different role, through job retraining, skill development, or job placement assistance. This helps the claimant regain financial independence and return to a productive life. Vocational rehabilitation is often a critical part of managing long-term disability claims, as it can reduce the duration of the claim and help the claimant recover financially and professionally. Question 11. What is the primary difference between short-term disability insurance and long-term disability insurance? A. Short-term disability insurance provides coverage for conditions lasting longer than 1 year, while long-term disability insurance only covers temporary disabilities. B. Short-term disability insurance typically covers up to 6 months, while long-term disability insurance covers disabilities lasting longer than 6 months. C. Long-term disability insurance covers only severe disabilities, while short-term disability insurance is for minor injuries. D. Long-term disability insurance has a lower premium than short-term disability insurance. Answer: B. Short-term disability insurance typically covers up to 6 months, while long-term disability insurance covers disabilities lasting longer than 6 months. Explanation: Short-term disability insurance (STD) generally provides benefits for a period of a few weeks to 6 months, typically for temporary injuries or illnesses that prevent a person from working. Long-term disability insurance (LD) provides coverage for conditions lasting longer than 6 months, including chronic illnesses, permanent disabilities, or conditions that require extended recovery times, while STD is usually designed to bridge the gap until recovery or until LTD benefits begin. LTD is a longer-term solution for disabilities that significantly impact one's ability to work. Question 12. Which of the following is a typical exclusion in most disability insurance policies? A. Disability caused by an automobile accident. B. Disability resulting from self-inflicted injuries. C. Disability resulting from a serious illness covered under the Affordable Care Act. D. Disability caused by an injury at the workplace that is covered by workers' compensation. Answer: B. Disability resulting from self-inflicted injuries. Explanation: most disability insurance policies exclude coverage for injuries or conditions that are self-inflicted. This includes injuries or illnesses that result from an intentional act, such as attempted suicide or self-harm. Disability resulting from accidents, workplace injuries, covered under workers' compensation, or illnesses that are covered by other health insurance plans may still be covered depending on the specific terms and conditions of the disability policy. Question 13. Which of the following factors is most likely to affect the amount of monthly benefits in a disability insurance policy? A. The claimant's age at the time of application. B. The insurance company's solvency. C. The claimant's educational background. D. The claimant's level of income prior to the disability. Answer: D. The claimant's level of income prior to the disability. Explanation: the amount of monthly benefits in a disability insurance policy is typically based on the policyholder's pre-disability income. Insurers calculate the benefit amount as a percentage of the claimant's earnings, usually ranging from 50% to 70% depending on the policy. The idea is to replace a portion of the lost income to help the claimant maintain their standard of living while they are unable to work due to a disability. The claimant's age, educational background, or the insurance company's financial stability generally do not directly affect the benefit amount. Question 14. Which of the following is true about the known occupation definition of disability in a disability insurance policy? A. It requires the claimant to be unable to perform any job for which they are reasonably qualified, regardless of prior occupation. B. It allows the claimant to qualify for benefits if they are unable to perform their specific occupation, even if they can work in other roles. C. It is the same as the any occupation definition, but offers more leniency in determining disability. D. It applies only to workers in specific industries, such as healthcare or law enforcement. Answer: B. It allows the claimant to qualify for benefits if they are unable to perform their specific occupation, even if they can work in other roles. Explanation: the lone occupation definition of disability means that the claimant is considered disabled if they are unable to perform the duties of their specific job or profession, even if they could work in another job. This is a more lenient definition compared to the any occupation definition, which considers the claimant disabled only if they are unable to work in any occupation for which they are reasonably suited based on training, experience, and education. Known occupation coverage is generally preferred by individuals in specialized or skilled professions. Question 15. Which of the following describes a common provision in group disability insurance policies that is not typically found in individual disability policies? A. Coverage for a limited period, such as 2 years, for disabilities related to mental health conditions. B. A guaranteed issue, which means employees cannot be denied coverage based on health history. C. A pre-existing condition exclusion that applies to all members of the group. D. A provision that limits benefits to a percentage of the claimant's income. Answer: B. A guaranteed issue, which means employees cannot be denied coverage based on health history. Explanation: in group disability insurance policies, especially those offered by employers, there is often a guaranteed issue provision. This means that all eligible employees can receive coverage without the insurer considering their medical history or condition. This is a major advantage of group policies because individuals with pre-existing conditions or poor health can still obtain coverage. In contrast, individual disability insurance policies typically require medical underwriting, and applicants with pre-existing conditions may be denied coverage or face higher premiums. Question 16. A policyholder in Missouri has been receiving long-term disability benefits for over a year. The insurance company recently conducted a review and determined that the policyholder is no longer eligible for benefits. What is the most likely reason for this? A. The claimant's condition has improved and they are able to work again. B. The claimant's disability benefits are due to expire after 12 months. C. The claimant's health has deteriorated to a point where they now qualify for Social Security Disability Insurance (SCI). D. The insurance policy includes a lifetime benefits clause that requires ongoing payments indefinitely. Answer A. The claimant's condition has improved and they are able to work again. Explanation. In long-term disability (LTD) policies, benefits are often provided as long as the insured remains unable to work due to illness or injury. If the insurer conducts a periodic review and finds that the claimant's condition has improved to the point where they are able to resume their occupation, benefits may be terminated. It is common for insurance companies to perform reviews after a year or two of benefits to reassess the claimant's ability to work. Question 17. In a Missouri-based disability insurance policy, the recurrent disability clause typically provides which of the following? A. It allows the insurer to terminate benefits if the claimant experiences multiple separate periods of disability related to the same condition. B. It provides continuous benefits if the claimant experiences a recurrence of the same disability within a specified period after returning to work. C. It allows the claimant to appeal any decision to terminate benefits related to a recurrent disability. D. It prevents the insurer from increasing premiums during the recurrent period. Answer. B. It provides continuous benefits if the claimant experiences a recurrence of the same disability within a specified period after returning to work. Explanation. The recurrent disability clause is designed to provide continuous benefits if a claimant experiences a relapse or recurrence of a disability related to the same condition within a specified period after they have returned to work. This clause is important because it prevents the policyholder from having to wait for a new elimination period, the waiting period before benefits begin, if their condition recurs within the designated time frame. This feature is particularly useful for individuals who have ongoing or cyclical medical conditions that may cause temporary disabilities. Question 18. Which of the following actions would likely lead to a reduction in disability insurance benefits? A. A policyholder receiving additional income from part-time work while disabled. B. A policyholder choosing a longer elimination period when applying for the policy. C. A policyholder providing false medical information on their application. D. A policyholder choosing a higher benefit amount at the time of application. Answer A. A policyholder receiving additional income from part-time work while disabled. Explanation. Most disability insurance policies include a work income offset provision, meaning that if a policyholder is receiving disability benefits and also earning income from work while disabled, the insurer may reduce the disability benefits to account for the income. This provision helps prevent policyholders from benefiting from both their disability insurance and income earned through work, which could otherwise result in excess compensation. The amount of reduction typically depends on the amount of income the policyholder is earning while receiving benefits. Question 19. What is typically required for a claimant to qualify for long-term disability benefits under a Missouri-based insurance policy? A. A diagnosis of a permanent disability that prevents any work activity. B. A doctor's certification that the claimant is expected to be unable to work for a minimum of 12 months. C. Proof of financial hardship due to the inability to work. D. A statement from the employer that no work is available for the claim. Answer. B. The doctor's certification that the claimant is expected to be unable to work for a minimum of 12 months. Explanation. To qualify for long-term disability benefits, most policies require medical documentation from a physician certifying that the claimant is unable to work due to a disability and that the disability is expected to last for a minimum of 12 months. This is a key requirement for LTD benefits because it ensures that the condition is severe enough to justify long-term compensation. Financial hardship or employer statements about job availability are generally not part of the standard qualification process for disability insurance claims. Question 20. Which of the following statements best describes the cost of living adjustment (COLA) feature in some disability insurance policies? A. COLA increases benefits based on changes in the cost of living to maintain purchasing power over time. B. COLA provides a lump sum payment in addition to regular monthly benefits if the disability lasts longer than 5 years. C. COLA adjusts premiums every year to reflect inflation. D. COLA is a mandatory feature in all disability insurance policies. Answer A. COLA increases benefits based on changes in the cost of living to maintain purchasing power over time. Explanation. The cost of living adjustment (COLA) is an optional feature in some disability insurance policies that allows for periodic increases in benefit payments based on changes in the cost of living, usually determined by the Consumer Price Index (CPI). This feature helps ensure that the disability benefits keep pace with inflation, protecting the policyholder's purchasing power over time. COLA is particularly valuable for individuals with long-term disabilities who may face rising costs of living as they continue to receive benefits. Question 21. Which of the following best describes the elimination period of each disability insurance policy? A. The time it takes for the insurance company to approve a claim. B. The waiting period between the onset of disability and the start of benefit payments. C. The time the claimant must wait before applying for benefits after becoming disabled. D. The period during which the claimant is required to return to work before qualifying for benefits. Answer B. The waiting period between the onset of disability and the start of benefit payments. Explanation. The elimination period is the waiting period specified in the disability insurance policy that begins once the insured becomes disabled. This period can range from a few weeks to several months. The insured must be continuously disabled during this time for the benefit payments to begin after the elimination period is over. It functions similarly to a deductible in health insurance, and the longer the elimination period, the lower the premiums, but it means the insured has to cover the initial period of disability on their own. Question 22. Which of the following is typically considered a triggering event for short-term disability insurance to pay out benefits? A. A long-term injury or illness that requires an indefinite recovery period. B. A medical condition that causes the claimant to be unable to perform their regular job duties for a specified time, typically less than 6 months. C. A permanent disability that prevents the claimant from returning to work in any capacity. D. A work-related injury that is covered under workers' compensation insurance. Answer B. A medical condition that causes the claimant to be unable to perform their regular job duties for a specified time, typically less than 6 months. Explanation. Short-term disability insurance typically provides benefits for a temporary medical condition that prevents an individual from performing their usual job duties. It covers a range of conditions such as accidents, surgeries, or illnesses with a short recovery period, generally less than 6 months. This is in contrast to long-term disability insurance, which provides coverage for more extended disabilities that last longer than 6 months. Question 23. What is a common benefit of residual disability coverage in a disability insurance policy? A. It provides benefits even if the claimant is not completely disabled but has reduced earning capacity. B. It extends benefits beyond the policy's standard duration if the claimant's condition worsens. C. It covers rehabilitation costs for individuals who are returning to work after a disability. D. It guarantees the claimant's full salary for the duration of the disability. Answer A. It provides benefits even if the claimant is not completely disabled but has reduced earning capacity. Explanation. Residual disability coverage is an important feature in many disability insurance policies. It provides partial benefits if the claimant is able to return to work but is earning less income than they did prior to the disability. This coverage compensates the insured for their loss of income due to the reduced capacity to work, such as when they can only work part-time or in a low-paying position due to the disability. It does not require total disability for benefits to apply. Question 24. Which of the following describes the waiting period of each disability insurance policy? A. The period during which a claimant must be disabled before applying for benefits. B. The time frame in which the insurance company must approve or deny a claim. C. The period of time between the onset of a disability and the start of payments. D. The time a policyholder must wait before receiving benefits after a claim is filed. Answer C. The period of time between the onset of a disability and the start of payments. Explanation. The waiting period in disability insurance is the length of time that must pass between the onset of a disability and when the policyholder begins receiving benefits. This period is typically referred to as the elimination period. In long-term disability insurance, it can range from a few days to several months depending on the policy's terms. During this period, the claimant is not eligible for benefit payments, but once the waiting period is over, benefits begin to be paid. Question 25. Which of the following is typically excluded from coverage under a disability insurance policy? A. Disability caused by an accidental injury during a car accident. B. Disability caused by a pre-existing condition that existed before the policy was issued. C. Disability due to a workplace injury that is covered by workers' compensation. D. Disability caused by an illness that requires hospitalization for more than 3 days. Answer: B. Disability caused by a pre-existing condition that existed before the policy was issued. Explanation: most disability insurance policies exclude coverage for disabilities arising from pre-existing conditions. These are conditions or illnesses that existed before the policy was issued. Insurance companies may exclude pre-existing conditions to limit their exposure to high-risk individuals. Some policies may offer coverage for pre-existing conditions after a waiting period, but typically the insured must disclose any health conditions at the time of applying for the policy. Question 26. Which of the following is true about partial disability benefits in a disability insurance policy? A. Partial disability benefits are only available for temporary disabilities. B. Partial disability benefits are designed to cover a portion of the insured's lost income when they can perform some job duties but are unable to perform all of them. C. Partial disability benefits are not available under any disability insurance policy. D. Partial disability benefits cover the full amount of the insured's lost income. Answer: B. Partial disability benefits are designed to cover a portion of the insured's lost income when they can perform some job duties but are unable to perform all of them. Explanation: partial disability benefits are provided to individuals who are unable to perform all of their job duties due to a disability but who can still perform some tasks or work at reduced capacity. The benefits typically cover a portion of the lost income based on the reduction in work capacity. This differs from total disability benefits, which are paid when a person is unable to perform any duties related to their occupation. Question 27. What is a pre-existing condition in the context of disability insurance? A condition that occurs after the policyholder applies for coverage but before the policy takes effect. B. A condition for which the policyholder has received treatment or medical advice before the policy was issued. C. A condition that the policyholder is aware of but has not received any medical treatment for. D. A condition that is only considered pre-existing if it leads to a claim. Answer: B. A condition for which the policyholder has received treatment or medical advice before the policy was issued. Explanation: a pre-existing condition refers to any medical condition or illness for which the policyholder has received treatment, diagnosis, or medical advice before the policy was issued. Many disability insurance policies have clauses that exclude coverage for disabilities arising from pre-existing conditions, especially if the condition was known to the policyholder before applying for coverage. Some policies may waive this exclusion after a specified waiting period. Question 20. Which of the following is an example of long-term disability coverage under most disability insurance policies? A disability that prevents a person from performing their job duties for less than 6 months. B. A permanent disability that prevents a person from ever returning to work. C. A disability lasting more than 90 days that limits the claimant's ability to work. D. A short-term injury that prevents a person from working for more than 30 days. Answer: C. A disability lasting more than 90 days that limits the claimant's ability to work. Explanation: long-term disability coverage typically applies to disabilities that prevent a person from working for an extended period, usually longer than 90 days. These disabilities can range from temporary conditions that last several months to more permanent conditions. LTD benefits are designed to provide income replacement for those who are unable to work due to an illness or injury for an extended period, often after short-term disability benefits have ended. Question 29. In Missouri, if a claimant is found to have misrepresented their medical history on a disability insurance application, what is likely to happen? A. The insurer may reduce the claimant's benefits by half. B. The insurer may deny the claim or void the policy. C. The insurer is required by law to pay the claim regardless of the misrepresentation. D. The insurer may offer the claimant a reduced premium on a new policy. Answer: B. The insurer may deny the claim or void the policy. Explanation: if a claimant is found to have misrepresented their medical history or provided false information on a disability insurance application, the insurer has the right to deny the claim or void the policy altogether. Misrepresentation is considered a serious violation as it can lead to a policy being issued under false pretenses. Insurers use accurate medical histories to assess risk, and failure to provide truthful information may result in a policy being invalidated. Question 30. What does guaranteed renewable mean in a disability insurance policy? A. The policyholder has the right to renew the policy each year, but the premiums may increase. B. The insurance company can cancel the policy at any time after the first year. C. The policyholder is guaranteed a low premium each year. D. The policy automatically renews without any change in terms or premiums. Answer A. The policyholder has the right to renew the policy each year, but the premiums may increase. Explanation. A guaranteed renewable disability insurance policy means that the policyholder has the right to renew the policy every year without the insurance company being able to cancel it as long as the premiums are paid. However, the insurer may increase the premiums at renewal time, but they can only do so for the entire class of policyholders, e.g., all individuals in the same age group, rather than singling out one individual. This ensures continued coverage, but with the potential for cost increases over time.